The big chunks you have to do right are spend less than you make and invest the difference early and often. And when I say early and often, what I mean is once a month, whenever you get paid, whatever it is, take that excess you're not spending, start putting that away into investments over time. Follow those 2 rules, you're rich. Don't follow those 2 rules, you're broke. It's really that simple. And the rest is kind of details.
Welcome to the Military Money Manual podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Hey listeners, Spencer Reese here from MilitaryMoneyManual.com, joined today by my co-host Jamie. Today on the podcast, we've got Jeremy Schneider. Jeremy Schneider is a successful entrepreneur, skilled software developer, and a personal finance expert. He founded a company in 2004 and later sold it for several $1 million. He's a self-made millionaire, and he hosts the Personal Finance Club Instagram channel, which has a lot of fantastic content about index fund investing. He also has 2 courses, Money Like a Millionaire and Index Fund Investing for Beginners. He retired at 36, and he's now started a new company called Nectarine, which is a marketplace trying to fix the financial advice industry. He's trying to find the good guys out there, and we talk a lot about that on the show. So without further ado, welcome Jeremy Schneider to the Military Money Manual podcast. Today, we're not going to be talking too much about Personal Finance Club. We're actually going to be talking about Jeremy's next project, which is called Nectarine. Jeremy, there's a lot of fruit-based companies from California that have gone on to have great success. What is Nectarine, and what are you guys working on over there?
Hey, Spencer and Jamie, thank you for having me back. First of all, I'm really glad to be here. Nectarine is trying to solve the problem of financial advice. Since I started Personal Finance Club 5 years ago, kind of the most common question I would get is, how do I find a good financial advisor? And I would kind of launch into this pitch about finding someone who's a fiduciary, someone who doesn't sell any products, doesn't kind of upsell you, isn't an insurance salesman, and basically charges just for the advice, which is called an advice-only financial advisor. And whenever I would kind of give that pitch, the young investor would kind of nod and smile and say, that sounds great. And then they would follow up with a question like, how do I find one of those? And my answer would be, I have no idea. It's really hard to find one of those. I don't know where they are. They all have different models and different pricing and different availability. And so we basically built a site that is an advice-only financial advisor marketplace where you can just put in your state, kind of filter by what you're looking for. In fact, military is one of our filters. And then connect with an advisor who charges just for their time. Right now, all of our advisors charge $150 for 1 hour. And there's no sales pitch, no upsell, no recurring fees. And I think it's been so hard to find a financial advisor in the past because there's either this like sleazy underworld of salespeople, or there's this really high bar. Advisors would be like, transfer all of your assets to me, and then I'm going to charge you 1% of them every year for the rest of your life, and then then I'll give you advice.
I know in the military, we often have this problem because, well, first of all, there are free, accredited financial counselors available on base. There are actually a lot of resources in the military where you can go get free financial advice. And for some reason, people don't seem to want to use them. So there's these companies, some sleazier than others, that come onto the base right when, the new airmen or the new soldiers show up. And they say, hey, let's go golfing, or let me take you out for a steak dinner, right? And before you know it, 10 years later, they're signed up for a whole life insurance policy. And it's the same thing with, a lot of other industries too. You see it with teachers as well. And there's a lot of money avoidant attitudes where they just think, I'm not good at money, or I don't understand money, or I don't understand investing. It's too hard. It's too complicated. And so these advisors, quote unquote, can come in and prey on them and say, look, there's no fees to you up front. And they're like, oh, great. And then 10 years, 20 years later, they open up their statement and they realize, I've just handed this person, $60,000, $100,000. And I've got very little to show for it because it was eaten up by all of the fees that are actually inside the product. So how does Nectarine filter to make sure that you're getting advisors that aren't going to be pitching whole life insurance products to the users?
I've been doing Personal Finance Club for over 5 years now, and we started working on Nectarine about 1.5 years ago. And the more I learn about the financial advice landscape, the more confusing and depressing it really is. And the reality is most of the people who call themselves financial advisors, most of them are actually salesmen. They don't actually specialize in giving financial advice, despite the title they put on their business card or their nameplate on their door. What they actually do is they make money when they sell you products. And so, yeah, these, doing air quotes now, I know this is a podcast, but you're going to have to imagine the air quotes. These financial advisors who show up to base and take you golfing, they're not giving financial advice at all. And they have an interest in making finances seem really complicated, because if it seems really complicated, then the young service members might say, okay, this guy is nice. He's been golfing with me. He even paid for the round of golf. I guess I'll just go with whatever he's selling. And you're right. Oftentimes, usually the people who show up on base are actually just straight up insurance salesmen. They're not investment advisors at all. There's like another tier of advisors, in quotes, that do sell you investments, but they sell you high fee, underperforming investments. There's like a third tier of advisors that are better. They basically manage all of your money for a percent of the assets. So for example, if you had $250,000, they would just take all your money, put it in investments, and then charge 1% per year, which is a little bit better actually, because at least they're not incentivized to pitch some crappy product. But that 1% can definitely add up over time. And if you don't have $250,000, that type of advisor won't even talk to you. And so the fourth type of advisor, which is what we do, is called advice only. And so you asked, like, how do we vet these advisors? The first thing that we do is we vet them based on our business model, which is none of the advisors can ever sell any products, push any insurance. There's literally nothing else to sell. You paying just for their time, for their advice. And so even if they're wrong, at least they don't have an incentive to push something, right? And then in terms of the vetting, we interview all of them. We, check to make sure they're actual licensed fiduciaries. We record every single one of our meetings. We request feedback from every one of our consumers. And right now our average feedback is out of 5 stars is 4.9 stars. And so not every single advisor is getting 5 stars in every single meeting, but I haven't found a single designation out there in this industry. There's like CFPs and CFAs and fiduciary and all these terms that can be associated with financial advisors, but none of them is a silver bullet. And so generally what we do is we just use the bar, would I refer my mom to this advisor? If we would not refer our mom to this advisor, they're not a Nectarine. And if we would, then they are, given that they meet all of our other requirements.
So what does a relationship look like, Jeremy? If let's say I just do my taxes and I have a tax question, or is this a 2-year contract I'm signing up for? What exactly am I getting myself into when I need some help?
Yeah, I love that question. We get a lot of questions like that, which is like, yeah, what is the contractual obligations, or what's the upsell after you meet for an hour? What do you have to pay after that? And the answer, there's none of that. The entire business as of today, we might add things in the future if people need more. But right now, as of today, you can buy an engagement for an hour and you meet via Zoom. You ask your questions. You can share a screen. You can show them your TSP. You can show them your Roth IRA. You can show them your budget, whatever you need. And then after the hour, you get an email with a wrap up that basically is a summary of what you talked about and then any actionable next steps, so you can kind of execute what you talked about. And that's it. There's no contract. There's no recurring fees. If you want to talk to that advisor or a different advisor again, you can just go right back and book another hour as needed. But that's literally it. And our advisors love this, which just seems strange. We were initially worried when we built this with consumers in mind. We want to do what's easiest for consumers to actually get directly to some really high quality advice. And we were worried that advisors would be like, oh, we really want to be getting them on the hook for the 1% per year or whatever. But just today, we got an email from one of our advisors. We've never lost an advisor, by the way. We've never had an advisor leave Nectarine yet. We probably will one day, but not yet. So I might as well say, well, it's still true. And one of our advisors emailed today and was just like raving about how happy she was doing what she loves the best, because she's talking to people who are desperately in need of this advice, who have had such a hard time getting over that bar to actually talk to a real expert financial advisor, because they didn't want to transfer all their money, or they didn't want to get into some long-term contract. And so it's literally just an hour and you can book more as you need it, and that's it.
Yeah, I can imagine that there's a lot of financial advisors out there who have some extra time, and like you said, like they got into the industry because they want to help people. And this finally gives them the opportunity where one-on-one or, with a family, with a couple, they can sit down and they can actually help someone. And I know Jamie and I have had people on the podcast before, and in 5 minutes, you can literally change the trajectory of somebody's life when you tell them, hey, you probably shouldn't be in the G fund in the TSP. You should probably be in a life cycle fund, target date retirement fund that pushes out to 2065 because, you're 20 years old and you can probably afford to take on that risk. And just seeing that light bulb go off in their head where they're like, oh, yeah, you're right. And then they log into their TSP account and they change it. That literally could have been $1 million decision. And all it took was talking to somebody with just a little bit more knowledge, and it completely changed the trajectory of that person's life. So I can imagine that there's a lot of advisors that you guys have on the platform that are probably pretty stoked that they can work with people. And because I imagine that most of the questions are probably not, how do I do a backdoor, Roth 401k with my, my $500,000 of income last year, right? Because those kind of people have CPAs. Those kind of people can go to the CFPs and ask these questions because that's who the industry is designed around. But, the Joe Schmo out there who's making $80,000 a year and, literally just needs a quick, hey, dummy check of, is it okay if I have an S&P 500 fund in my Roth IRA and my Roth TSP? And the advisor can say, well, let's talk about your goals and what you're trying to do. But yeah, in general, that's okay. I love what you guys are doing, and I hope some of our listeners will check it out.
That's exactly right, though. I love what you said, because I do think there is a set of financial advisors who really want you to transfer all of your assets to them and be collecting 1% per year. But, just in your 60 seconds there, you gave two really, good pieces of advice, like don't have all your money in bonds, invest in a life cycle fund. And yeah, sure, it's fine to hold the same fund in two accounts, given a little bit of background on your goals and things like that. And so for sure, you can get a lot done in an hour. And the advisors who are I couldn't possibly give you feedback without getting into some super complex, expensive long-term relationship. That's a little bit disingenuous, I think, because if you sit down with a 22-year-old, look in their investment accounts and see they're holding all cash, in about 10 seconds, you can make them $1 million more over their career by just pointing out what went wrong there, right? And so, we really like, the low entry point, the low first step. It doesn't need to be $150. If you guys have access to those free advisors, I would dramatically prefer you go there rather than the insurance salesmen who are taking you golfing. But whatever it is, get someone who doesn't have an incentive to sell you some product. Get someone who's an expert who can just look at your situation and help.
So Jeremy, under this advice-only model, is there any security? Do I have to share bank credentials? Or you mentioned I don't have to transfer any accounts to their brokerage or to their firm. So it's literally just screen sharing my budget or my Vanguard account, and then they can see everything there?
Yeah, there's nothing tricky going on. You don't link your accounts. You don't transfer your money. We're not taking control of your assets or anything like that. It can be just audio if you want. You can just get on the phone and talk to them. It can be video. Or if you do want to share your screen and just have them look at your budget or your portfolio or whatever it is. So it's totally up to you to control what your advisor sees if you want to talk to them first before you're sharing specific account information. It's all secure. We're registered with the SEC. There's governmental oversight where there's very strict controls on sharing and security and things like that. And so it's all safe and secure, and it's all in the consumer, the client's control.
So I just pulled up the website, hellonectarine.com, and right at the top, it basically is drop down to your state and click find your advisor. And so I just want to share how simple it is to find someone. When I click on my state, it shows a handful of 10 advisors for me right now. And then I can go to the filters and, like you said, filter by military or any other topics like widows or insurance or estate planning, budgeting, Roth conversions, like whatever the topic is. And then each of the advisors there, you can see some of their credentials and some of the highlights of their experience, as well as reviews they've had and the number of meetings they've had on Hello Nectarine, and the number of reviews they've had, and the number of appointments they've had on Nectarine. And one of my favorite parts is that each advisor has their next available appointment. So if I need to meet with someone today at 11 a.m. versus I really want this person's expertise, but they're not available for another week and a half or so, you have all that data is right there in about 15 seconds.
Thanks, Jamie. Yeah, I mean, when I made the joke earlier, I didn't know how to find a financial advisor. It was true because before we started recording, we were saying the old-fashioned way was you go to this really cryptic licensing site, and there's this phone book of websites, and you send a fax to someone, and then you set up a I just stole it. That was Spencer's joke. I stole it because it was really good, but it was this complicated way to get in touch with them. And then when you do get there, you're like, well, is this a good one? I just faxed some random person on this long list. Are they better than the others? So we wanted to put it in one marketplace where you can compare the reviews, you can compare the availability, you can check out right there, you see the prices. And it is just trying to get you from I need help to sharing a screen with an expert right away. Another question people ask, like, are these people US based? Like, yeah, they're all US based. They're all licensed, registered fiduciaries. You can see, all their experience and details and credentials and stuff right on the site.
This might be a little bit of a niche question. So right now I'm living in Hawaii, but I'm a Florida resident. Should I select the state I'm stationed in or where my estate planning is? Do you know anything about that?
So the reason we asked the state is because our advisors are all independently registered in certain states right now. And so they can only give advice in certain states. And that is based on your state of residency. So I'd say if you're living in Hawaii and your state of residency is Florida, you would search based on Florida. That said, by the time this airs, that might not be an issue anymore because we're in the process of basically converting to, this is getting a little bit technical, but converting to an SEC registration, which means all of the advisors will be registered under us nationally. And so then your state basically becomes irrelevant. And so if the state thing is still there when you check it out, then yeah, put in your state of residency. And if not, suddenly we'll have a lot more availability in all states because the advisors won't be restricted on where they can give advice.
Cool. Funny enough, when I switch to states, 2 of the people are still available on both states. So it works out for me.
Yeah. Usually I used to point people towards the Military Financial Advisors Association, which is a great group. They're all CFPs. They're all military connected, either military spouses or former active duty, Guard or Reserve. That's a great organization if people want like a very niche specific military people. But even on Nectarine, if you put in the military filter there, you can see guys and gals who have served themselves and they're now CFPs. And this is exactly the kind of people that you want to be talking to if you have those in-depth TSP tax questions, especially when you're on deployment and you're trying to maximize your tax-free savings. So I can't recommend it enough. Check it out, hellonectarine.com, and just dig around into a little bit of like the how it works. I think the model that you've set up where the advisor is working for you, right? Like they have no other incentives other than to provide you with the best advice that they can. And I think, correct me if I'm wrong, but the model is you kind of ask your question, they do some homework ahead of time, and then you schedule a meeting to go over it. And then there's a follow-up email as well. Is that right?
Yeah. So the way it works is you choose your state, choose your advisor, you kind of choose your time and then check out. And then you get what's called our intake form, which is basically some demographic information about you, your location, and then you can basically give your whole background and your question. So then the advisors have a chance to review your situation beforehand. Then you get in a call, you can ask more questions, they can answer your questions. And then after the call ends, an email goes out, the advisors enter their notes. Our advisors really do an incredible job. We started working on this, like I said, a year and a half ago. And one of the early questions we had was, are the advisors going to want to do this? Is this too burdensome for them to do all this work for the 150? And of the 150, by the way, Nectarine takes 30% and the advisor gets 70%. And so they're not getting 150, they're getting $105. But they can focus on what they do best, instead of having to do marketing and sales and paperwork and accounting and yada, yada, yada. They can just show up at the time of their Zoom calls and give the advice. And so they're actually really digging it. And they're doing a great job with those wrap-up emails. They're giving really detailed notes and really detailed actionable next steps. And so it's, and that's all for that one price of 150. So it's been working extremely well. And, my team and I are very happy about this and working very hard to make sure we keep everything good and growing.
I like too that you've really embodied a lot of the principles that you've been promoting over at Personal Finance Club for years now. I think that's one of the best Instagram channels out there especially for DIY. I've always been a do-it-yourself investor. I discovered the Bogleheads very early in my investing career, read all the books out there. For me, it was simple, right? It was, okay, open up a Roth IRA, open up my TSP, put money in, invest in index funds, sit back and relax for the next 10 to 20 years and let compounding interest do its thing. Other people, it's not that simple for them, right? They hear that and they think, wow, that sounds really complicated. But you do simplify a lot of it at Personal Finance Club. And then I think that the Nectarine really fits well into that model because you can take someone who, reads Personal Finance Club and says, okay, this is like, I agree with all of this in principle, but I don't exactly know how to implement it. And then they can go over to Nectarine, pay $150, buy an hour of some professional's time, and then they're able to actually implement the principles that you're promoting at Personal Finance Club. And then if somebody doesn't want to pay $150, which by the way, $150 for, especially for like a very niche personal finance question. I mean, imagine how much better you'll sleep at night knowing that a Roth IRA is not the same as a Roth TSP, right? Like if I had $150 for every time somebody asked me that question, man, I just think that's great that, if you are more of the DIY type, go read Personal Finance Club. You can figure out all this stuff on your own. I mean, you even have one of your slideshows shows you like the exact steps to take to open up, I think it was a Fidelity account or something, and how to invest the money. I know as a 16-year-old, 17-year-old kid, 20 years ago, that would have been amazing to have someone just show me exactly what to do and get involved in index funds. But if you're not that kind of person and you just need a little bit extra help, I think Nectarine's there to kind of help you get through that, and kind of what the principles of your Nectarine advisors are, because you have all that, years of history on Personal Finance Club.
Right. Yeah. Thank you, by the way. I'd like to point out right now, this is not an infomercial. I have not paid Jamie and Spencer for this endorsement or whatever endorsement it is. But you're right, by the way. There's no secrets here. This isn't some talk to our advisors. We're going to tell you like the super secret way to beat the market. Like that's absolutely not what's happening here. Everything is plainly already out there. Like you said, it's very simple. Follow the Boglehead philosophy, live below your means, buy and hold index funds, minimize fees. Like there's no secrets out there. But you're also very astute to point out that like not everyone has their own money podcast, right? There's some people for whom they glance at them one day like, oh yeah, that sounds like the right way to go. But I see a lot of people who do understand it better than they even think they do. But there's so much complexity out there in this world. There's the insurance salesman telling them something that doesn't make sense. There's the crypto bros. There's the get rich quick schemers. And they just like, am I missing something here? And so just for an hour to have someone else's eyes with a little more confidence and saying, nope, you're doing it exactly right, or catching a mistake, And I would have gladly never made Nectarine. Like I'm a DIY guy myself, but like I said, over the last 5 years, there's been a lot of people who just want an expert to talk to, and I'd rather they have a good one than a bad one if they're going to go pay for advice.
Yeah. Even as a DIYer, though, there are some topics where I just want a second opinion or a sanity check on it. I'm not an expert at taxes. I'm not an expert at, some specific topics. And just like right now, I was telling Spencer before the show, I hired a swim coach and I'm getting my butt kicked in the pool. It's like I can swim safely, but I never did like swim team or learned how to swim properly. So like I hired someone based on their expertise to teach me a skill that I don't have as well as they do. And so if there's someone out there that's an expert in tax planning or in doing a backdoor Roth for the first time after my income goes up or whatever it is, and it's relatively cheap overall. But I think sometimes even DIYers need just a little bit of a pat on the back, like, yes, that's the right decision. And it's $150 and it's a $100,000 or $1 million decision in your future.
Yeah, totally. It's pretty easy to rationalize the expense when you realize like the stakes of making small errors along the way. And yeah, I agree with you. Maybe if you understand the basics of buying an index fund, but you get an inheritance or your parents are facing required minimum distributions, or, there's lots of like little stuff along the way that maybe isn't in your area of expertise. Rollovers, tax matters, a tax time. Should you realize capital gains? There's all this stuff that, an advisor that can just look at it and give you some advice might quickly save you that much and more in taxes or growth or whatever it is.
Yeah. I mean, for most military officers, by making the right contributions to the right retirement accounts, if that costs you $150 to have a conversation with someone and they show you like, you can do this, you can do that, it's going to save you way more than $150 in taxes, especially compounded over a lifetime of investing. So yeah, I think the price is right there. And is it worth it? You were kind of alluding to this earlier that, the advisors are putting in a lot of work here. Do you think it's sustainable at $150 an hour? Or do you think that's going to have to go up one day?
We're really happy with how things are going right now. And so I don't think we will ever do away with the 1 hour engagement. I just think it's what needs to happen. We've talked about things like variable pricing where advisors can set their own price. I think some would lower their price, some would raise their price, depending on if they're, just the availability. If they're sitting there and have more hours open per week. Maybe they'd rather do it for $90 an hour if they can fill up their calendar. Or if they're booked out 3 months, like some of our advisors are, maybe they're going to charge more. And we might do that in the future, but we're not really rushing to that because we do like the relatively low price point as an entry level. And we might also launch a more comprehensive, what we're going to call like a full plan product. And so about 80% of our clients so far have gone exactly what they wanted. Like, oh, great, we covered a ton in an hour. I'm good to go. Maybe I'll book again in a year or something. And then about 20% have like realized like, oh, wait, I have like much more comprehensive planning needs. I want to really break down my budget, all my accounts, my insurance needs, my retirement projections, things like that. And the hour isn't really conducive to that depth of planning. And so I think we will release like a full plan product that's more expensive, but that's going to involve or include multiple meetings and sharing of all your financial data and crunching of the numbers through financial planning software and things like that. And so I think to answer your question, is this sustainable? I say yes, even if we do exactly what we're doing now. Like I said, all of our advisors have been really happy and are making some pretty decent money from it. You only really have to do about, 3 meetings a day to kind of get in the $80,000 a year range. And so it's sustainable since they're not doing all the marketing and stuff that they normally have to do to bring in those 3 meetings a day. But even with the variable pricing and the full plan, I think our advisors will be even happier and clients will get exactly what they need.
Just a quick note from one of our sponsors, and then we'll be right back to the show.
It's no secret Spencer and I are both huge fans of the Thrift Saving Plan, the military's version of the 401k retirement plan. We've both been investing in the TSP for over 14 years and are thrilled to announce we've consolidated all the information you need to know into a new course called the Confident TSP Investing Course.
That's right. The course is a comprehensive guide to navigating the TSP, breaking it down to easy, bite-sized chunks that lay out the basics of the thrift savings plan, the funds available, and the investing strategies so you can build wealth while you serve.
We both know what it's like to be a beginner and to be overwhelmed with all the information that's out there about investing in the TSP. Head over to militarymoneymanual.com/TSP, Tango Sierra Papa, to find our simple breakdown of all you need to know. You get lifetime access, and we'll have a growing library of content. And one of my favorite parts about the course is that for every course we sell, we're going to be donating one to an E4 or below.
Yeah, I love that feature of the course, Jamie. So if you're an officer, an NCO, a senior NCO out there, and you purchase a course, first of all, thank you. And also know that you're helping a fellow service member, a sailor, a soldier, a Marine, an airman, a guardian, a Coast Guardsman, E4 or below, take one step closer to their financial success.
The link's in the show notes, or head over to militarymoneymanual.com/TSP, where you can sign up for the Confident TSP Investing course. Now, back to the show. Jeremy, you mentioned earlier the kind of the 4 types of advisors, and you had a really good Instagram post about this a few months ago. And I have a question about like the strip mall advisor, the number 3, which you had as the second worst on that post. So I talked to someone recently and they're like, oh, my uncle's friend manages it at name whatever strip mall brokerage firm. What do you do for someone who's in that situation? Their parents have always gone with their family friend who's at the strip mall. How do you get out of a situation like that? And does Nectarine have a potential role in helping people convert to a DIY model if that might be right for them, or at least looking into that model?
That's a great question. That's another question I get a lot, which is kind of more generally speaking, like, how do I fire my financial advisor? And the first advice I would give there is don't rush into it. Despite all the things I don't like about the financial advisor strip mall model, it's still dramatically better than not investing. It's still dramatically better than making some sort of catastrophic mistakes. And so I'd say don't rush into it. And I'd say the first step would be go manage money on your own for 6 months or something. Go open up a Fidelity or Vanguard account, throw in $100 or $500 or whatever it is, and then just watch it for a while and get used to the process of logging in and buying an index fund, watching it go up and down with the market over the days. Then I think you have much more confidence with looking at what your advisor's doing and looking at what you're doing yourself. My own story, by the way, is I sold an internet company when I was 34 for just over $5 million. And my share was about $2 million after taxes. And so I took about 10% of my money, about $250,000, and gave it to one of these kind of strip mall advisors who, like you said, was like an acquaintance that I knew through like a college alumni group or something like that. He had an office and he had a pitch and he took my money. And over the course of a couple of years, I was like looking at what I was doing, what he was doing. I was like, this guy is a clown. Like, he's just a total, I mean, he's not a bad guy. He's just doing whatever he was trained to do. But he was just buying random stocks for no reason. He was picking high expense ratio, random mutual funds for no reason. Like no reasonable person could say what he was doing was likely to outperform an index fund. But he was required to make it look really complicated in order to justify his own existence, his own necessity, right? And so I did what I'm suggesting right now, which is like do it on your own for a while. And, how much did that cost me for a couple of years? Not that much, like a couple of years ain't the end of the world, but, a couple of decades, all right, that's going to start to add up to be pretty dramatic. And so don't rush into it, but also don't let it go on for too long. And so then I basically sent him an email and said, hey, thank you so much for your help over the last couple of years. I've decided to self-manage my investments going forward. Expect a transfer request coming from Fidelity in the next couple of days. And he said, no problem. And then I went to Fidelity and said, hey, please transfer all my money from this brokerage. I put in my account number. The actual logistics of how do you move their money, you basically go to your new brokerage, either call them or click the button to do an incoming transfer. A lot of people are like, oh, my old financial advisor is going to be mad or they're not going to let the money go. It's your money. They're not allowed to keep it. That would be like a high crime felony for them to not let your money go if you ask for it back, right? And so while they might, be giving you this sense that it's so complicated and you're crazy to leave, yada, 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 they have no right to keep your money. And so go create the transfer request from your new brokerage. The money will come over. And then once it's there, you basically want to go make sure you look at it. And whatever it is, whether it came over as cash or the previous investments, you're likely going to want to sell everything and then buy the index funds you want. And this is where I might say Nectarine might come in handy, because then you might want an advisor to just, look at that process with you. Maybe either give you a second opinion on if your financial advisor is doing the right thing for you, or put eyes on the transfer before and after it happens, just to make sure that there's not any unusual tax things like massive gains or losses that are going to impact your tax returns in a taxable account, for example.
Yeah, that's great, Jeremy. I think demystifying that process is really helpful for people, because I see a lot on Reddit. People are like, hey, like I signed up with this, whole life insurance guy when I was a young lieutenant or a young airman. And like, I've been with them for 7 years now. And I've kind of realized like, oh, they're not really doing it for me. Like I don't really need that product. And how do I leave? How do I get out of it? And like, are there going to be fees and stuff? And it's like, yeah, potentially, there might be a small fee to get out of it, but it's like ripping the Band-Aid off. Like you got to do it. And like you were saying, wherever you're moving the money to, you can start the transfer on that site and let them handle all the paperwork. So I know with like Schwab, with Vanguard, with Fidelity, you say, hey, here's my account, with whatever boiler room style investment firm you were with before. I need to move my shares out or my funds out and put them into whatever, the appropriate fund, and let them handle all the paperwork. They'll do that all for you. And like you said, you can let your current advisor know, hey, this request is coming. And it's as simple as I'm decided to manage it myself, or I'm going with a different strategy. And maybe they'll give you the hard sell of like, oh, come on, man, we've been together for 10 years, blah, blah, blah. The harder they're kicking and screaming to keep your money, I think is a good sign that
the higher the fees probably.
Yeah, exactly. Because I'll tell you what, like Vanguard has never once questioned me when I move money with them.
No.
But it's a really nice technique that you mentioned, Jeremy, to at least start trying it on your own and not rushing into it. So just canceling your auto contributions that were going to your high fee brokerage with high load fees and all those kind of expenses, and just try it for a couple months, and then starting the process of moving over. So it doesn't have to be ripping the Band-Aid off right away before you feel confident in your decisions. And by the way, again, not a sponsored plug, but you have a really good course out there about index fund investing. So if people want to learn the basics of that, can you just hit the Personal Finance Club course option there for people?
Yeah, for sure. These two kind of products I have been built out of necessity. I'd say when I started Personal Finance Club, I was like a young retiree just looking to have a passion project and share my knowledge. But I would get the same questions over and over, which is, what's an index fund? Which stock should I be buying? What's an IRA versus 401k, or all these things. And it was 2020. I was bored during the pandemic, and I was like desperately trying to do a data dump from my brain to the people who were asking questions. And I was like, oh, let's build like a video course where I walk through these things A through Z. I was going to even give it away for free. And I was like, oh, but if you give something away for free, no one values it. No one's going to finish it. So I decided to charge. I think now we're charging $99. And I think you guys have a coupon code too. That's military money that you can get $20 off. So it's $79. But it's basically like a 8-hour walkthrough of all these topics, which accounts, which funds, taxes, investing for kids, rollovers, little 5 to 10 minute video on each with quizzes baked into it. So if you need that kind of systematic walkthrough, and again, there's no secrets in here. It's the same thing you'll find in the classic books on investing, and the same thing that you guys talk about on this show, almost every single episode. The same thing I talk about on Instagram. There's no secrets, but if you do want that, if you're like a video course kind of person and want the consistent walkthrough, it's there at personalfinanceclub.com and click on courses. And there's 2 courses, one on investing and one on basically all the other basics of money. Also, we donate 25% of our profits to charity. We've donated over $270,000 so far to charity, including a lot of military charities. And we also have 100% money back guarantee. So if you selling a course on the internet, I know sounds like some sleazy grounds, right? And so we just try to do everything we can do to not make it sleazy. And if you buy the course and you take the entire thing and you think it's just mediocre or you think it's a scam or whatever, just email us. We'll give you your money back, no questions asked. Or if you're a thief and you want to steal the course, just go buy it and then immediately email us and say, I want my money back, and then take the whole thing. I prefer people aren't thieves, but we do that just because we were trying to put our money where our mouth is and not try to trick people into getting into something that they don't want.
Yeah, I think it is hard selling courses online, as Jamie and I know. I always struggle with the sleaziness of it, but it's an unfortunate side effect of human psychology that people just don't value free things. They value things that they pay for. But like you said, if somebody takes it and they're like, that was crap, then just ask for your money back and you'll get your money back. You know where Jeremy's on Instagram to DM him.
Email probably works better because the DMs get lost on Instagram sometimes. But yeah, we have an email. It's on our website. It's easy to find. Yeah.
Too many bots.
Yeah.
Hey, Jeremy, as we get to the end here, you kind of mentioned part of this earlier. I just want to recap for the listeners that maybe they've never heard of you before, never seen Personal Finance Club. Can you recap briefly your 2 main rules in Personal Finance Club and what that means to maybe a military family that's just trying to get started on their personal finance journey?
Yeah, I make a post every single day on our Instagram account that basically is like a simple little infographic about basic personal finance and investing tips. And every post I end with the 2 rules of Personal Finance Club. Rule number 1 is to live below your means, which means spend less money than you make. I feel like there's kind of this almost cliche image of a 20-something service member who starts making some money and has relatively little costs because their housing's covered or whatever it is. And then they go out and buy like a $80,000 truck with a $900 a month payment or whatever. I'm like, oh no, that was your $1 million when you're in your 40s or whatever, And so if you're making $50,000 a year, don't spend 50 and certainly don't spend 60, spend like 40, right? And with that $10,000 you don't spend, that invested leads into rule number 2, which is invest early and often. If you invest that consistently over time, you're wealthy, right? We've been talking a little bit about kind of strategic stuff here, like advisors and rollovers and TSPs and 401ks and IRAs and traditional and Roth. All that stuff is kind of details. The big chunks you have to do right are spend less than you make and invest the difference early and often. And when I say early and often, what I mean is once a month, whenever you get paid, whatever it is, take that excess you're not spending, start putting that away into investments over time. And then you're going to start to realize over time this amazing effect of saving and compound growth, which will turn into millions over the course of your saving and investing career. And so follow those 2 rules, you're rich. Don't follow those 2 rules, you're broke. It's really that simple. And the rest is kind of details.
I love it. I think it's simple, but not easy all the time. So
yeah, totally. It's not easy because the trucks are tempting and real life happens and you have a kid or you want to move or whatever it is. I totally get that. But people say, hey, it's impossible to live on $60,000 a year. I'm like, well, some people make $50,000 a year, so they figured it out. Likewise, you see people who make $300,000 a year who are still living paycheck to paycheck, and expenses have a way of just creeping right up to earnings. And so you have to be a little bit disciplined to say, all right, I'm going to just carve out a section off the top of my income, put that away every month, and then live on the rest.
It's also like I've been talking to some of my dad's friends who are getting ready to retire. And some of them are quite wealthy, $1 million, $2 million, some even more than that. And they, sometimes say, oh, I'll never have enough to retire. And it's like, do you think people retire who have less than you? And what do you think their lifestyle looks like, right? Do you think they're living off of rice and beans? Some of them, maybe. But I think it helps to put in perspective, like if you're the kind of person who's listening to this podcast right now, either you're doing better than a lot of people out there, or you have the potential to be doing better than a lot of people out there. And if you're in the military, you've got, almost a guaranteed paycheck as long as you keep showing up, and you have access to the TSP. So right there, I mean, you can take care of the principles right there of investing early and often and spending less than you earn. As long as you keep your spending in check, you've got the income.
Jeremy, I have one follow-up question to your 2 rules is what about to the haters in the comments section? And we get this sometimes too, is like, well, $1 million is never going to be enough in 50 years. It's like, what do you say to someone like that that's just a naysayer of like, oh, well, it'll never be enough, inflation, la.
I have a few things. First of all, just something about the world I've learned is that everything that's popular is controversial. And so as I gain popularity, as you gain popularity, as this bold idea of spending less than you make and investing early and often gains popularity, think about the most popular person you can think of that you think is beyond reproach, like the Dalai Lama, Mother Teresa, Taylor Swift, whoever it is. They all have haters, right? They all have haters. So the more popular are, the more likely are to have haters. So that's just part of life. But those same, the comment section is filled with people saying $1 million is not even that much. And it's also filled with people saying, how could you possibly save $100 a month? And they're saying the opposite things, right? One saying $100 is so much money, I don't have that much. And the other saying $1 million isn't very much money. And what I would say to them is that it's really easy to think of ways why it won't work, right? It's easy to think of reasons why you're absolutely going to fail with anything, right? Any sort of goal in life, I can think of reasons to fail, why I couldn't ever possibly fit, why I couldn't get a promotion, why I couldn't find a girlfriend, whatever it is. You can always think of reasons to fail, but that's not a really successful way to go through life. And so instead of looking at it in the negative, I'd say look at the positive. Instead of saying, okay, $1 million's not going to be that much. Well, then how about 2 million? What do you think it's going to take? Maybe you should shoot for that. And if you say $100 is impossible to save, well, how can you decrease your expenses by $100 and increase your income by $100? If you can do that, then you got $200. Look for ways to make it work rather than excuses to make it fail, because you can make excuses forever and then you'll be broke forever.
Jeremy, thanks again for coming on the show today to talk about Nectarine at hellonectarine.com and how military families can find a one-on-one appointment with advisors at a low cost entry, removing that barrier to get advice-only help on whatever the topic is, whether it's one session or multiple sessions, no contract. And we talked a lot about Nectarine and the advisors that are out there and the 4 types of financial advisors are out there. So we appreciate you coming and breaking them down and helping the military families understand that they have options and that they can get advice-only investors. And it's easy to find them through this new model.
Thank you both so much for having me. And I know it's a mouthful, the fee-only, advice-only fiduciary. It is a very confusing space out there. So we're trying to condense all that into one word, Nectarine. It is simple. And you're right, there are a lot of California-based fruit companies that seem to be successful out there. So hopefully there will be one more one of these days.
Awesome.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.